Pankaj Kapoor at this point. Thanks so much for coming down to our studios, Pankaj. Prerna was making this point about nearly 53 months of unsold inventory, and I want to pick up on that. That's an unusually high figure. How do you see that, panning out over the next couple of months?
It suggests like, my absorptions levels are very low. The sales are not really picking. So like inventory months is like, current inventory divided by the monthly offtakes of the inventories. And it's clearly suggesting that most of the cities are becoming inefficient. Prices have really peaked up in almost all the cities.
Sure.
It's not really a case only for Mumbai and NCR. Other markets also really seeing the surging prices. So the affordability is a major concern. Because of that, the sales are not really picking up. And apart from that, like, and affordability is major concern with the end user. But I'm also seeing that today's investors' participation in the market is also reducing because they're not finding prices unproductive. They're finding prices highly unproductive. It's very difficult to look at there would be upside in the prices from here. You only see the downside prices, pressure in the prices. So in that light, like, there are lesser investor participation. There are bigger issues with regards to the affordability and the price parities. And because of that, overall sales are down. And in India, we have a housing shortage. So we do not have a problem of the supply and inventory. Problem is that whether we have a consumer who can afford that kind of pricing.
I want to come to that. In fact, we've seen some bit of uptick as far as sentiment goes. Has it started playing out as far as the housing market goes, both in terms of sentiment and then a consequent pickup in demand?
It has not. And the reason being, if you look at it like in realty market, like, there was a time from 2009 to 2012. We saw there were prices surging as well as the volumes were coming by, and that it happened because 2008 there was a correction in prices, so investor had the value built in. Today problem is like for investor the property prices are already peaked. They know from here there is only downside pressure. So even though there is, there has to be value for the investors to participate in the market. While if you look at in the equities from 2009 to 2012. It was subdued, prolonged, subdued growth in the market. So people, I think, are moving towards the equities because they see there could be a rally and there could be better valuations. And so I do not see, unless there is a corrections in the realty prices, which brings in the values on which investor will participate, or end user will find it affordable, the problem is going to be solved.
Can you put a figure as far as those property prices go in the next couple of quarters?
My own sense is like, it looks like realty, the way I'm seeing the last couple of quarters, I see that it's moving into a prolonged inefficient phase of it. The reason being is, there's an affordability because of the prices and the people's purchasing power. Second is that the cost has started catching up. So the builder does not even have a scope for reduction in prices. So you look at my taxation have increased quite a lot. Cost of the capital, which has been very high. So unless there is a scope, builder will not be able to reduce. So it's like that catch 22. We probably will see time corrections and the price corrections combination. So for senses like Mumbai, if the prices undergoes correction up to 25%, we see the parities in the affordability. But I may see probably 5% corrections in the next 2 years or 3 years. Property prices show the stagnancy. So there would be a slow recovery rather than, sharp decline and good market.